Welcome to PolicyCast. In today's episode, we will delve into the evolving landscape of risk regulation as global standards continue to converge. We'll explore how organizations can navigate increasingly stringent compliance demands while leveraging innovative technology to manage emerging risks. Joining us today is Ramkumar Subramanian, Partner Financial Services Risk Advisory at Thornton Bharat. Ramkumar will share insights on how proactive, integrated strategies can align governance with innovation in a rapidly interconnected regulatory environment. So let's begin. How has the regulatory landscape for risk management evolved over the past decade in the financial services sector?
Thank you, Simran. Good afternoon, and thanks for having me on your podcast this afternoon. Very interesting question, Simran, and I'll break it down into a couple of parts. The risk landscape has evolved over the last decade or so. We are moving on from a rule-based approach to a risk-based approach. And when I say that risk-based, rule-based is whereby while the risk-based is ensuring consistent compliance, potentially misallocation, resource by treating all cases as the same. A risk-based approach evaluates specific situations to prioritize resources, focusing on higher risk areas, being more flexible, though it requires more expertise and manual analysis. In a nutshell, we are moving to hybrid mode, moving on from a rule-based approach to a risk-based approach, ensuring that there is more leeway given to the financial services sector players to frame their own risks. So that's my summary on that.
Thank you. Moving on, how do frameworks like the Basel norms, RBI's risk-based supervision, the ECL modeling, or SEBI's risk management guidelines shape institutional strategy?
Thank you, Simran. Just taking a cue from the first question, each of these norms have evolved from a rule-based approach to a risk-based approach, and it has come to the fruition that every entity has got its own maturity model. And they are allowing for financial institutions to frame their own risks and risk weightage and risk rewards, so that they are able to maximize the benefits to the investors.
My next question is, what role does RegTech play in easing compliance and improving risk transparency?
RegTech has got a huge role to play, Simran. Purely it's because we are moving to a more digital age. Beyond digital, we are moving into AI, artificial intelligence, and RegTech is an important play. And we as Grant Thornton are heavily investing in our own tools and enablers. From a risk standpoint or FS risk standpoint, we have the Athena Guard tool, which is a proprietary tool which we have developed to ensure that financial services institutions who are working with multiple regulators are able to put their regulations in one place, are able to monitor and provide their compliances to the various regulators. So answering question, RegTech is an important tool and it's an enabler, and every organization is looking at how to maximize their investments in RegTech.
Thank you. That was truly insightful. Do you think India's regulatory approach to risk management is converging with global standards, or do we still see significant differences compared to the US, UK, or the European Union?
Thanks, Simran. That's a very pertinent question, and I would differ on the question itself. I would say that our regulations are superseding the global regulations. We are in the forefront of making regulations which are suited for the large population we have. We have a very diverse population from rural to urban areas, and increasingly we are seeing regulators being very proactive in making those decision making, especially when it comes to the fact that our regulator, the way they handle the COVID pandemic in terms of ensuring credit is passed on to the last person in the population was something which was commended, and we found our ex RBI governor also commended for being the governor of the year a couple of years back. I would say that we are if not better, in par with some of our global players. Simran.
Thank you. That brings me to the last question. If you could change one aspect of the current regulatory approach to risk management, what would that be?
Um, Simran, I would change the question and I would say that, I want our regulator continue the same way as they're doing. It brings me back to the first question you asked me about how risk has evolved within our country. We have moved on from a rule-based to risk-based approach, and that is something which is leaving our country in the right direction, where the regulator is coming in to intervene in situations where they think they deem to get involved in. An example I want to give is about on the monetary intervention in terms of how they are making inroads by selling forex and buying forex to ensure that the economy is stable, the forex rates are stable. I believe that that's the approach our country needs to take, rather than them intervening on all small things. Which that is what rule-based approach does, but risk-based approach makes it more. Uh, the onus lies on the individual entities within the financial services ecosystem and how they frame the rules and how they ensure that they're compliant to the day-to-day regulations.
Thank you for that. That brings us to the end of this episode of PolicyCast. A big thank you to you, Ram, for breaking down such an important and rapidly evolving topic into clear and easy to understand insights for our listeners. I'm sure our listeners will find these insights very valuable. Stay tuned for more such conversations on tax and regulatory developments. Until next time, thanks for listening.